Hello, everybody, and welcome to the podcast. I'm your co-host, Daniel Ackerman. Normally, I would be here with George Herrera, but I'm flying solo this week. We were both traveling, and George's wife was positive for COVID, so we wanted to play it safe and do this separately. So I'll be doing two podcast episodes regarding the market wrap up for Manhattan and also for Brooklyn. So those will be separate episodes. And George will be doing one on his own for the Queens market update. If you are joining us on YouTube, welcome to the channel. As I mentioned, my name is Daniel Ackerman. I'm the co-host of Real Talk with QHT podcast. Make sure you check out the podcast over on Anchor.com or iTunes, whatever your favorite podcast client is. And we're always doing providing informative or good information, and hopefully being a little bit entertaining. Try to keep it light and funny. But anyway, welcome. And what we're talking about today, this podcast episode is going to be the Manhattan market wrap-up for 2021. So we'll talk a little bit about what happened in the Manhattan market in 2021, and also, I'll give my thoughts on what might be coming up in 2022 for the Manhattan market. I've got my notes off to the side here and on my laptop here, so if you see me looking away from the screen, I'm probably looking at my notes. And let's just jump in. So the first thing to mention, well, besides Happy New Year, so I want to say Happy New Year to everyone out there. Welcome to 2022. I really didn't think that 2022 would start out the way that it did. I thought when I recorded our first couple of podcast episodes in 2021 that the 2022 landscape would be very, very different. But here we are, back in the thick of positive tests for COVID. Everybody's getting infected. Thankfully, we're not in the same place in terms of vaccines and hospitalizations, so a lot less people getting hospitalized, a lot less people passing away. But nevertheless, I think there's a current of maybe fear or trepidation out there. So we'll talk a little bit about that today, and how it relates to the real estate market. But the big news for 2021 in the Manhattan market was, of course, the rebound. So let's talk a little bit. Let me go through some of these headlines that came out in 2021, because the rebound to the market, 2020, the market declined really significantly with the shutdown in New York, and all of the housing stock in New York is pretty much high rises, condos and co-ops. There's obviously some townhomes, but they're the very small minority of the inventory. So all these high rises, they were shut down. Co-ops, you couldn't even show properties in a lot of co-ops. So there was a big shutdown. Management companies weren't working. So everything came to a standstill. But then once the vaccine came out and things started to open up, the way that the market turned around gave everybody whiplash. It was pretty amazing. So let's look at a couple of these headlines. So CNBC had a headline: Manhattan real estate breaks record in 2021, reaching $30 billion in sales. Now that was driven largely by the number of sales that were going on more than the prices. So we'll talk a little bit about that. New York Times, in 2021, New York housing market made a stunning comeback. Let's look at a couple of the takeaways from that article. One of them was that the third quarter of 2021 had more sales activity than any other time in the last 32 years in Manhattan. That's amazing. So more transactions happened for that third quarter than any third quarter in the last 3 decades. So just, take note of that. Sales in Queens and Brooklyn pushed further into record territory. We're going to focus on Manhattan. Now the rebound, this is important. that rebound was largely driven by two different sectors. The article talks mostly about the luxury sector. So a lot of people with a lot of cash saw that prices were down 10, 15, sometimes 20, 25%, depending on the property type. And um, and so people with that kind of money were able to jump in and buy properties at a discount. A lot of investors, a lot of foreign buyers, a lot of very wealthy people like Jeff Bezos buying up condos as investment properties, or potentially as just getting a good discount on a luxury property that they've always wanted to have. So that was one side of what drove a lot of the recovery, right? You had more sales on the high end of the price scale, so that of course is going to show, that's going to drive price recovery and the number of transactions. The other side of that, and this is anecdotal on my end because I've seen it, is that a lot of sales were happening on the low end of the market. So a lot of people that maybe could never afford to buy in Manhattan, all of a sudden, with the low interest rates, the incredible amount of inventory that was online, because it was thousands and thousands of units online, driving prices further down. And so people that maybe could never afford to purchase before, or maybe hadn't thought about purchasing before, all of a sudden purchasing became a reality. And with the low interest rates, they decided to jump into the market. And so we did see a lot of sales on the low end of the market, which, Manhattan doesn't have a lot of affordable neighborhoods, but you're talking about areas like Harlem, Washington Heights, Inwood, that whole northern section of Manhattan above 125th Street saw a lot of activity and a lot of sales happening there as people jumped in and said, you know what, I'm finally going to buy a place and be an owner rather than a renter and just throwing away my money. Maybe I can at least build some equity. And so we really saw that throughout, starting with the second quarter and all the way through to the end of the year. So that was really interesting. Now, in terms of prices, if you look at the overall market, and I'm looking now at Urban Digs, which is a very good service that we professionals use, and it's available to consumers as well. But if you look at the year-on-year prices, median sale price, and that's everything. That's if we look at the overall market. So that's going to be new development condos, that's going to be resale condos, and it's going to be co-ops, and of course some townhomes. So you lump all of that together, and the median sale price as of December 2021 was 1.13 million, okay, on 520 transactions. Now, we're not going to look at 2020 because in 2020 we're in the middle of COVID. We were still in the middle of COVID. We hadn't quite come out in December of 2020. So that kind of skews the results. So we need to go back and look at 2019. And if we look at 2019, December 2019, we see that the median price was 1,048,000. And we could go all the way back to December of 2017, and we have a median price of 1.175 million. So the recovery, we got back all of the losses that we had through the pandemic, and there were sectors that were down 20-25%, as I mentioned, on price during the depths of the pandemic. That would be around May, June of 2020. And so the recovery, it did drive prices up, but it's not as if prices are setting records. If you are an owner of a run-of-the-mill, two-bedroom condo, two-bedroom co-op, that is kind of like the meat and potatoes listing in Manhattan, you're not looking at setting records on your sale right now. You're basically looking at selling for the same amount that you could have back in 2017, 2018, 2019, because the prices have really not budged at all. In 2018, December of 2018, median prices were 1.1. In 2017, 1.175. Let's go back to 2016, and you had 1.038. So, you've looked at an increase of about 10%, give or take, since 2016. But since 2017, those prices have stayed steady, which kind of shows you that the overall trend of the market is fairly flat. Okay, now you can look at headlines, CNBC, New York Times, Real Trends, and they're all talking about this huge surge in real estate activity. That's probably going to continue somewhat. This new variant, Omicron, might stifle that for a little while, but I think we've been here before. There's a little less fear in the air, and we know how to sell now with this kind of thing. And people are kind of, now everyone's vaccinated. Most people are vaccinated and boosted, at least in Manhattan. And so I think there's a little less outright fear and panic about selling. It might slow things down a little bit this January and February as we go through this surge in infections. But the news that we're hearing from the CDC and from Fauci and from everyone else is that this is probably a temporary surge and will kind of taper off pretty quickly because the infection rate is so quick and so fast that we'll get out of it a little bit faster. That being said, we can expect that this upward trend is going to continue in 2022, but it'll probably slow down, right? Because what we saw was kind of all that pent up demand for housing kind of getting soaked up. And as that pent up demand kind of tapers off and slows down, then the price increases will slow down, and so will the increase in transactions. So some people, I saw something in the New York Times saying that they're anticipating that we may end 2022 with as modest an increase as 3% in prices, and and some people are predicting slightly more. We don't have a crystal ball, so we don't know for sure. But based on experience and based on my read on what's going on, we'll probably see things pick up in the spring for sure. Starting in early March, April, May, June, we'll see prices surge. That's the typical seasonal cycle. On top of the fact that that we're probably going to be coming out of Omicron by then, or hopefully, let's say. But we are going to be seeing interest rates rise at least 3 times this year. The Fed has already told us that. We are seeing inflation, rise incrementally. It's not the panic that everyone is kind of making it out to be, because the economy is still very, very strong. Salaries are going up. The stock market is extremely strong. All the major indicators of the economy are very, very strong. So, it's not doomsday that inflation is happening a little bit and prices are going up a little bit, because salaries are also going up. I just saw a headline today that we saw the largest increase in salaries in like the last, 10 years or something like that. So, but we are going to be seeing interest rates rise a little bit, and that's going to, limit some purchase power. And as I said, this demand is going to slow down. So we probably see a tapering off of price increases. So that's kind of a high-level overview of what happened in 2021 and what might be coming in 2022. Let's dig in a little bit on the numbers for fourth quarter in 2021. I'm going to be looking here at urbandigs.com, and hopefully if you're watching on YouTube, I can throw some of these charts up on the screen. But let me just back up to these charts now. So currently, we have a supply of 4,837 units listed in Manhattan, and that's down 33% from last year. So we can see how much activity just happened in the fourth quarter, because we're just coming out of the fourth quarter, and that really shows a huge decrease in supply. That's a good thing for homeowners and sellers, because that means that there's less competition and from other sellers, and buyers are competing against each other, which means you can get higher prices. There's 4,361 pending sales. So those are things that are under contract now, and that's up 42.5% from the same time last year. So Again, really good indication of the strength of the market. Median sale price as of December, like I said, 1.13, 1.14 million. The days on market, this is a good one. Now, when there's a lot of inventory and the market is slow, obviously your days on market is going to go up. And last year it was well over 100 days. I think at one point, days on market of like 150. So right now, days on market, 67. Now, I've been looking at these stats pretty regularly since 2016. 67 days on market is the lowest I've seen in a long time. I think when I first started using Urban Digs back in 2016, it would have been around 70, 75, 80. And it's gone up steadily since then with some dips here and there. But 67, that means that things are moving. On average, it will take you 2 months to find a buyer. If you price really attractively, you're going to get more bids, more competition, and you'll get that under contract faster because you'll get the price that you want. If you price a little high, I always recommend against this, but especially in a market like today, you can push the envelope a little bit because there is a lot of demand there. But like I said, we're not setting record prices. So if you price a little higher than what the market is doing, you can expect your days on market to be higher than 67. Monthly contract activity. So contracts signed in December, we had 1,100 contracts signed in December, and that's up 19.7% from the prior year. This is a great one. The median listing discount. So, the discount is what's your list price, and then how much lower does the average apartment sell for? Right now, it's at 3.9%, and that's down 51, 52%. Now, down is good. That means that the discount is less. So you're getting more of your asking price. A big one here is the monthly absorption rate. So the absorption rate is a measure that we real estate agents use a lot. It's kind of a theoretical number. It says how long would it take you to sell all the inventory that's currently listed if nothing else came online, right? So it's obviously kind of a hypothetical situation. Now, a good number is anything under 6. 6 months would be a balanced market. 4 months is a seller's market. And, above 7 or 8 months would be a buyer's market. Now, at one point last year, before the recovery started, the absorption rate was as high as 17 months. That's a long time to get through all of your inventory. Just to show you how sharp that recovery was, the current absorption rate is 4 months. That means that if nothing else came online and everything kept going the way that it's going, we would get through all of the inventory in 4 months, and that's fast. That's, again, one of the better numbers I've seen since I've been tracking these numbers since 2016. That's down 65% from last year. So all of these things show that the fourth quarter, these are all numbers based on December. So obviously, it's not the whole quarter. It doesn't account for November, October, but it gives us an indication of how the winter quarter went. And the fourth quarter of sales in Manhattan was one of the strongest fourth quarters on record. So that's a good thing. Now, looking forward to 2022, as we talked about before, we can expect that this upward trend will continue, but slow. Now, what does this mean for you as a seller? If you're a homeowner considering a sale in 2022, you want to, first of all, it's good news, okay? So this is a good time to go on the market. You're not going to, if you do everything right and you price correctly, you're not going to just sit on the market. And very importantly, you're not going to have trouble with your appraisal. We were seeing a lot of problems with appraisals in 2020 because as the market slowed and prices dropped, appraisers are required to use recent sales. And so if, a lot of times people were going into contract at a certain price and the comps weren't there to support the price, and the appraisal would fail, and therefore the sale would fail. Unless, as a seller, you made a big concession or the buyer was able to bring a lot more cash to the table. But buyers weren't really inclined to do that in a market that really favored them. They would, they'd leave that deal and go find a better deal somewhere else. So we did see quite a few deals fall apart, market-wide because of failed appraisals. Our team, we look at appraisals very, very carefully, and it actually forms the basis for all of our pricing. So, moving forward in 2022, as we talk about pricing, if you're looking to sell, the appraisal aspect of that is super important because there's getting your market price, which gets those offers in the table, in the door, and gets offers on the table so that you have negotiating power. That's very, very important. But ultimately, you need to go under contract at a price that you can pass the appraisal, or have so many offers on the table that you can actually, play buyers against each other and make sure that you get the appraisal contingency waived. So either way, attractive pricing is still very, very, very important because that's how you gain a position of strength. When you have multiple buyers, now you're in the driver's seat and you can dictate terms. If you don't have that, you've got no leverage. So although the activity is really encouraging, and prices have recovered back to some semblance of normal, keep it in mind as you make your considerations for selling in 2022 that pricing is still, you're not setting records. You can't push the envelope too much. And you can always consult with us and we can give you our professional opinion based on experience and based on what we're seeing in the market, because we look at this data every day on how far, if at all, you can push that envelope. If you have a one-bedroom co-op in Manhattan, your sales picture is very different from if you're selling a luxury 3-bedroom, 4-bedroom condo. The New York market, the Manhattan market is hyper specific. Neighborhood matters. What floor you're on matters. What type of property it is matters. Co-ops and condos do not have the same submarket. Whether it's new development or not matters. All of these things have an impact on your ability to sell. If you want to see a difference, we can look at that very quickly, a difference between what the co-op market looks like and what the condo market looks like. So let's look at Manhattan. Let's look at a particular neighborhood in Manhattan. So let's say Midtown West, Hell's Kitchen area. I'll pull this up. So according to Urban Digs, 1-bedroom co-ops in Hell's Kitchen, their prices, the median sale price there is $584,000. Okay, and if we look at that historically, we can see that it's definitely higher than 2020. 2019, same price, $554,000. 2018, same, $537,000. So it really hasn't moved very much. 2017, it's gone up a little bit since 2017. 2017, you had a dip. Only 2 one-bedroom co-ops were sold, and that was for $492,000. So there you see an example of pretty much a flatline market there. And if you were to compare that to one-bedroom co-ops in, say, Inwood, you would see a difference because that neighborhood is a little bit more affordable, and we're seeing a lot of influx there. Now, if you compare that to, say, condos in the same market, now co-op prices increased 21% year on year. So from December of last year, 2020, co-op prices increased in Hell's Kitchen 21%. Now look at this. The median sale price for a 1-bedroom condo in the same neighborhood, so you're in the same area, all I changed was the property type, and the prices have only risen 6.5% since 2020. So that shows you that market, that particular neighborhood, it's very sensitive to the property type. Why are condos only going up 6.5%, whereas co-ops went up 21%? Well, the median sale price for a condo there is $985,000. So that's a very different buyer from the buyer who's spending about $500,000 for a 1-bedroom co-op. So again, the lower end of the market, we have been seeing surges because people all of a sudden thought, hey, I can buy now. I've got the means, interest rates are low, it's going to be cheaper or not that different from renting, so let me become an owner. and co-ops are typically in New York City and in Manhattan. They're your entryway. So that just goes to show how different these little micro markets are in Manhattan. So if you are an owner and you're looking to sell in 2022, make sure that you contact me. I'm the Manhattan specialist on our team. You can call me at 646 844 5770, and I can go through this data with you. We can show you how the different markets vary and what your property can be worth this year. But the good news is that 2022 should be a fairly good year for real estate after the huge recovery of 2021. So everybody, that pretty much wraps it up. Be safe out there. Get your vaccines, mask up, protect the people around you, and protect yourself, and and be positive. 2022 has good things in store. It looks like, despite some of the uncertainty that we're seeing. The lucky thing is that we've been here before, so we know how to handle this now. Thanks very much for listening. Hope you found it valuable. Make sure to, if you're on YouTube, if you're watching on YouTube, make sure to subscribe to the channel, hit the bell, and you'll get notifications of all our new content, video tours, informative articles like this. Thanks for listening on the podcast. Make sure to check us out on iTunes. You can subscribe to the podcast, and we'll be posting hopefully very regularly this year. We are full-time real estate agents, so we podcast when we can, but we do plan on putting up good information this year. Thanks again for listening. I'm Daniel Ackerman, and we'll catch you on the next one. Bye-bye.